hold on, let's make one quick change. What's up guys, I'm Kay Scholl. Welcome to another financial awareness video. Hope you like the blue. So last Christmas of 2019, one of the fantasy football experts that I follow brought up that GMC truck commercial. You know, the one where the husband surprises the wife with a couple new trucks and he's all shocked and surprised because she grabs the black one and that's the one that he wanted. Yeah, this one right here. Well, the fantasy football guy was like, who does that? Who has the money to just go out and buy 2 new trucks, let alone surprise his own wife? My response? Section 179 of the IRS tax code. Let's get to work. Okay, before we dive into this, first off, and most importantly, I am not a CPA. This is one of those topics and one of those situations where you call your CPA and you say, hey, I heard some guy on YouTube talking about Section 179. I want to know if my business qualifies for that. Now, with that out of the way, this video is brought to you by request of one of my subscribers. If you have any specific personal financial topics you'd like me to discuss or cover, let me know in the comments below and I'll work it into my upload schedule. Now, Section 179, what is it? This basically allows business owners to expense certain purchases all in 1 year as opposed to depreciating that purchase over a period of time. It's not that complicated to understand. It's basically an incentive from the government that encourages business owners to invest in themselves and invest in the companies. Again, instead of depreciating a purchase over a longer period of time, you can depreciate that vehicle or that piece of equipment all in the same current calendar year in which you bought the piece of equipment or bought the vehicle and placed it in service. What are some examples of qualified property that would allow you to take advantage of this? Buildings, machinery, industrial vehicles, furniture, equipment, software, patents, copyrights and trademarks, livestock, and probably the one that gets the most attention, passenger vehicles. Under the subheading of passenger vehicles, you've got cars and light trucks, in which case you can depreciate up to $11,610, and you've got SUVs and trucks greater than 6,000 pounds, in which case you can depreciate up to $25,000. However, it's really hard to find an SUV or a truck brand new for under $25,000. So here's a list of vehicles that are completely exempt from the $25,000 limit and really any dollar limit for that matter as well. Shuttle vans that seat more than 9 passengers behind the driver, pickup trucks with beds at least 6 feet long where the bed cannot be accessed from the interior by the driver, and delivery vehicles with no seating whatsoever. That said though, the IRS rules state that the vehicle does not have to be completely brand new, just new to you. So hop online, do some research, and maybe see if you can find a gently used or certified pre-owned vehicle that fits the bill and will get the job done. Maybe you could buy a used F-150 for under $25,000, or maybe a used GMC Yukon, or whatever you think you might need for your business. Maybe you can find it used. Additionally, IRS Publication 946 tells us that even a vehicle that is subject to debt still qualifies under Section 179. So basically, instead of paying cash in full to purchase a vehicle, you can finance it and still be able to do this. So what would be some business owner occupations that maybe would qualify to take advantage of Section 179? Well, the obvious one that comes to most people's mind would be really anyone in the construction industry, because you've got to haul a lot of material and a lot of goods from job site to job site. However, the next obvious one that comes to my mind would be realtors, because you're constantly traveling from one home to another home to show property, and you're using your passenger vehicle quite regularly. However, what if you are a medical device sales rep and you've got to go from hospital to hospital, from operating room to operating room, moving your equipment around? That could be something as if you are maybe paid under an LLC that you own or paid under an S Corp that you own. That could be an option as well. However, there are some concerns. Here's what you need to watch out for. It's going to be very challenging for you to justify that this vehicle purchase is 100% business related if you don't have another vehicle to use for your primary driving needs. Now, if you already have one vehicle and that's your daily driver and you're buying this business related vehicle, you're probably in the clear. Consult your CPA. But if this is the only vehicle that you own, it's going to be tough for you to justify depreciating 100% of this through Section 179. Also, by taking the 100% depreciation in full in the year in which you purchased this vehicle and placed it into service, you're essentially bringing your basis all the way down to zero, which means that whenever you go to sell this vehicle, you're going to owe capital gains tax on whatever you sell it for. Another thing to be careful for, depreciation recapture. If you ever stop using this vehicle for business use, you may owe some of this money back. You also cannot take advantage of Section 179 in order to generate a business loss. You got to be making a little bit of money here in order to be able to do this and have to have a tax liability of at least $25,000 in order to take advantage of Section 179. Check out IRS publication 946. You'll learn about depreciating property. Also, check out IRS publication 463. You'll learn about travel and car expenses. I personally know a lot of people that take advantage of this. However, although Section 179 is a powerful tool for business owners, I wouldn't recommend just going out and purchasing a newer vehicle and placing it in service just for the sake of this depreciation. Very similar to your personal budget, the less money you spend, the more money you keep. With your business P&L, the less business expenses you have, the more profitable your business is. That said, if you've had a great year this year or really in any year, this could be a great tool for you to take advantage of if you're looking to purchase a newer vehicle for your business. This might be a great thing for you to do. Give your CPA a call and see if it makes sense. If you found any value throughout this video, do me a favor, hit that like button. If you want to learn more about my favorite tax credits and tax deductions, click this video right here. Otherwise, I don't know, you might like that one instead. I appreciate your time. See you in the next one.